Hey guys, how you doing? So Dan from Trading with Dan here. In this video I'm going to show you how to trade on Bitmex. So we're just going to get rid of this. So this is the Bitmex platform. As you can see, we're going to go through the mentoring guide on actual Bitmex, so I can show you guys what to do. So here we go, how to trade on Bitmex. While Bitmex offers several cryptocurrencies to trade, all profit and losses are settled in Bitcoin. So it is a Bitcoin only exchange, so you don't send fiat currency to it, you can only send Bitcoin. Bitcoin have their own contract for BTC which tracks the market price, and it's called XBTC. Users must deposit and withdraw funds in Bitcoin rather than dollars, even though dollars are what the platform's cryptocurrencies are traded against. So first you've got to register an account. So you go onto the Bitmex website, and all you need to do is put in your email address and a password, and then you'll be emailed a confirmation link which you need to confirm to verify your email address. Once that's done, you just need to ensure you use the two-factor authentication. So the Google authentication is the best one to use, I think, to provide an increased level of security to your account. So click on this link, you'll get 10% fee discount on your fees for 6 months. So right, to deposit funds, so you're going to click on your account tab. So I will just show you the account tab is here, and then you're going to go to deposit. So you're going to click here, and this is where you will use this address to actually send the Bitcoin to. So you guys will know how to send Bitcoin if you use Bitcoin and you've got Bitcoin. So that's the address, and that will be your deposit address. Right, so that's how you deposit funds. You'll have to wait for obviously them to arrive on the Bitcoin network. Obviously you guys know how Bitcoin sending works. So to navigate the trading screen, so to click trade link at the top of the screen, you'll be taken to the trading screen where you can then click on the tabs for any of the cryptos that you want to buy or sell, and they are Bitcoin, Cardano, Bitcoin Cash, Ethereum, Litecoin and Ripple. So we'll just have a look at those. So we click onto the trade. We can see here we've got the Cardano. We've then got Bitcoin Cash here. We've then got EOS here. We've then got Ethereum here. Litecoin there. Tron there. And Ripple there. And you'll also know on the contracts, say we go back to Bitcoin, you've got the perpetual contract, or you've got the June contract, which will be slightly different. If you look to the perpetual, then we've got the September contract, which again trading a bit higher, and then the December contract. So you can trade different contracts actually on here. So right, there we go. Don't know why it's saying sorry. Right, so we go here. So that's how you navigate it. So entering a stop loss. So say you want to enter a trade, we want to enter the stop loss first. So you know your stop loss will get triggered, and you don't have to worry about your stop loss getting triggered if you're not in the trade, because you can say it as a reduce only trade. So I'll show you guys how to do that. So say we want to buy Bitcoin at 9,410, but we want to have a stop at 9,400. We can set the stop market first. We've got limit, market and stop. Obviously we've done these limit and market orders and stop orders in previous videos, so you should know what they mean. So we're going to put the stop in first, and we're going to enter like a 1,000 contract trade, which is equivalent of $1,000. We're going to set that stop price, like we said, at 9,400. So this is what we want to click, close on trigger. Now what that'll mean is when we sell this, it will only reduce the position size. So even if we set it now and the market quickly dips down, it won't put us short 1,000 contracts, because it will only reduce the position. So this is where you can set your leverage for the trades. So you click that. It's going to tell you that notice this stop order has been submitted with close on trigger instruction. These orders can only reduce your position, not increase it. So what that means is telling us that because we're not in a position at the moment, because we're placing our stop beforehand. So we just click sell, and that will be our reduced only, and it says again your stop may not trigger. The stop order would increase your position from 0 to 1,000. So it's telling us again that it won't enter the trade. So this is in case you wanted to trade a breakout trade. So say for example I wanted to sell 1,000 contracts. If we go down to 9,400, I'd need to click off that close on trigger, but we're going to place the stop. So now this stop won't get triggered. So then say now we want to put our buy order in. So we want to put a limit order in. So we're going to go to limit. We're going to go to 1,000. We're going to buy at 9,410. We need to click off this reduce only because this is to actually open a trade. So we're going to click buy long 1,000 contracts at 9,410 with 25x leverage. On here, this will tell us the details. That's the cost of with the 25x leverage, the available balance we've got, the position size after execution, and then we can click buy. And that active order you can see is now in here. So we've got our stop, we've got our active order, and we don't have a position yet because we haven't been filled. So we're probably going to get filled in a second, but either way I've shown you guys how to do it. So I'm going to cancel that order because I don't actually want to put the trade in, and then the orders have all been cancelled. So what are we going to look at next? We've entered the stop loss, we've entered our position details, we've set our leverage, we've reviewed the details, and we didn't open the position, but you saw we did everything we needed to do to open the position. So profit and loss case studies. So what sort of effect will market moves have on your profits and losses when trading with leverage? Let's have a look at some hypothetical examples. So say we go long with 10x leverage. So for simplicity, let's assume the value of your position is 1 Bitcoin, which is, for example, $10,000, we'll call it. So your initial margin at 10x will be $1,000. So here we go. We'll click on this so we can see it. So a price change of 1% will be a new price of $10,100. Which will give us a profit of $100, and that is a profit of 10% of our $1,000 margin that we used. It's obviously not a 10% on the price, it's only 1% of the price, but it's a 10% increase of $100 on our $1,000 investment. So that's why it's 10x, because 1 times 10 equals, 1 times 10 equals 10. Yeah, that's correct, that's what I was trying to say. So again, so say we've got a 2% price change. So the new price of Bitcoin has gone from 10,000 to 10,200. That's a 200 profit because we were trading with a 1 Bitcoin position, but with a $1,000 margin at 10x. So that would give us a 20% profit, a $200 profit on a $1,000 trade. A $1,000 trade margin is 20x. Is 20%, sorry, not 20x. So let's have a look at the opposite. Say the market went down 5% to 9,500 from 10,000 when you entered, and you've got a $1,000 position at 10x. So the market has actually gone down $500, and $500 is half of your position, half of your $1,000, $500. You're actually down 50% on that trade. So that's obviously quite a big loss. So if you think about it, the market moved down 5%, but you lost 50% because 5 times 10 equals 50. Right, so that's a profit and loss case study. So we've obviously done this for going long, and then going short is basically the opposite, so we don't need to look over that. You guys can have a look at that in your spare time, but it's basically the same. So risk management tips. Trading with leverage is complicated and risky, so remember these simple tips to minimize your risk. Practice makes perfect. Bitmex offers a testnet, a practice environment here where you can actually trade where it's not real. So you should set that up to get used to trading it, to get used to it before you then trade the real thing. Getting familiar with placing, executing, cancelling orders whilst interacting with the simulated marketplace. You should start with a small amount. So then when you do start trading with real Bitcoin, you should start with a small amount. When you're first starting out, the leveraged trading, your deposit should only be small. That way, if the market moves against you and you place a wrong trade by mistake, your losses will be minimized. So you should limit your leverage. Do not get seduced by potential maximum leverage available, especially when starting out. Minimize the amount of leverage you use, and this will help limit risk. So pick a market. Rather than spreading yourself out across different markets, focus on a single market. For example, the XBT USD pair, and develop a deeper understanding of the price movements and trends of that market. So you should understand your order. When setting up your first few trades, it's essential that you study and understand the order screen. The field, pay attention to cost, as this shows the maximum amount you could lose from the trade. Use limit trades rather than market trades if you can. When trading on Bitmex, a limit order, we discussed it in our section on limit orders. The limit orders, you actually get paid a fee you get paid basically for placing limit orders because you're providing liquidity to the exchange, whereas a taker fee, well, if you hit a market order, you will actually pay a fee of 0.75%. So here is your limit order fee rebate that you will get. Right, so leave it to experienced traders. If you're new to either online trading or cryptocurrencies, leverage trading is definitely not for you. If you know what you're doing, however, leverage trading on Bitmex can be an effective tool to help increase your profits. However, make sure you are fully aware of the risks involved before deciding whether it is the right approach for you. So, the cost, the glossary of terms that we may see on Bitmex. Cost is the maximum amount you could lose on a trade initial margin, the amount you must deposit in your account to open that position. Leverage. So, use a small amount of leverage of capital in your account to control a larger amount of position. So, leverage is you use a small amount of capital in your account to control a larger position. A limit price is the price that you set to open the position. Long means buying now and hoping of selling high at a future price. Liquidation price is something you have to be aware of. It's the price at which your position will be automatically closed. So when you open a position on Bitmex, it will tell you what your liquidation price is based on the leverage that you're using. Maintenance margin, the amount of funds you must hold in your account to keep the position open. Order value, the total value of the position. The quantity is your size of position in US dollars. Short is betting against the market, hoping for the price to fall, and XBTC is what Bitmex calls Bitcoin, so it's the equivalent Bitcoin contract. So that's how you trade on Bitmex, guys. So that's very basic. There's not necessarily more to it. That is the basics. There's more to trading, but that's how you would actually use Bitmex to put in orders, place your stops, and what sort of orders to use. So thanks for listening, guys, and I'll speak to you on the next.